Well, April 15th has come and gone, and maybe you've paid your taxes and maybe you've deferred them till October. But we're going to talk to a tax preparer today that knows his stuff.
You are listening to Wealth Talks. Today, our CPA Jack Cohen joins us for the show. Welcome to the podcast, Jack.
How you doing, fellas? How are you?
Doing
Seems
great.
like I've survived at least so far this tax season. I got by April 15th, so that's a good sign.
That's a good sign. Well, you know, Jack, with 33 years of experience at the IRS, and then you turned back to the light side, we really appreciate the work you do for us and for our clients. What are you seeing with the 2018 tax returns that are being filed so far and the effects of the law that was passed in 2017 affecting people's taxes in 2018?
Well, first off, I would say for most people, this has been a bit of a challenging tax year, both for taxpayers and for tax preparers, because as you alluded to, I mean, a lot of the laws have changed. Even the way tax returns look have changed, and I think that's thrown people for a loop. I think even some people who used to do their own tax returns on TurboTax, I think have decided to give up and go to a professional preparer just because the darn tax return looks different. So I would argue that for sure, for many people, I think it's been certainly a more complex tax season so far. And as far as how taxpayers have actually made out, I would say it's kind of a mixed bag in that there's, like anything else in life, there's winners and there's losers. And I think for a lot of people, certainly wage earners, overall, I would say for most people, especially if you live here in Nevada, I would say they probably paid less tax. And we'll talk about what less tax looks like in a second. I think for a lot of business owners, a lot of the tax law changes in 2018 have actually helped a lot. But I think also, there's been a lot of press lately how some people actually didn't get the refunds that they thought they would get this year. Mm-hmm. And I think that was one of the things that we all had talked about before. And that's because what happened is that the IRS changed all the withholding tables so that people would get more money in their paychecks every week or every 2 weeks. And so then what happened is they go to file their tax returns, and maybe in prior years they had gotten these large refunds, but now because they've gotten more money in their paychecks, now they file the tax return, the refund is much lower, or maybe even in some cases they owe money.
So Jack, that refund that people used to get and maybe even look forward to, isn't that really just like an interest-only loan to the federal government?
It is. I mean, that's a great point. I mean, in a perfect world, what most taxpayers should be looking to do is break even. You shouldn't want to owe a lot of money at the end, and you shouldn't want to get a large refund, because if you have a large refund, basically it means that the government has had the use of your money all year. But here's where the reality comes in, is that, if people had the more money in their paychecks as they did this year, the problem is they probably spent it. So, strictly from a financial standpoint, you're right. Why let the government use your money all year for nothing? But for some people, it was almost like a savings when you think about it. It was money that they didn't get in their paycheck. Consequently, they didn't spend it. Now they get this big refund at the end for which they can then go out and spend it one time, I guess.
So a takeaway as you're listening to this is you want to make sure that you are indeed saving that extra amount throughout the year.
And
then you can get the best of both worlds.
Yeah. That's right. But reality is human nature being, we tend to spend what we have. I mean, which is a subject for another day, and I think a subject that you guys talk a lot about when you do your live presentations about, the idea of saving money.
Absolutely. And it takes a discipline and it takes a system. And if you don't have that, then money just kind of slips through your fingers and you end up saying, where did it all go to?
That's exactly right. I couldn't agree with you more, Tom. But I think in response to that, I mean, there's been obviously, like I was saying, even though maybe in total people end up paying less tax, now they don't get this refund at the end, and a lot of people have been complaining about that. And I guess that's what causing the IRS to go back and say, well, maybe we got to come up with a new system for determining what your withholding should be. Now, I have personally not seen what the draft looked like, but from the articles I've read, in true government fashion, they aren't going to make this easy. I mean, it almost sounded to me like you'd almost have to do your tax return to be able to figure out what your withholding should be. Sounds kind of crazy, but that's the government for you.
This is talking about the new W form now, or W4 form.
Exactly. The old W4 forms were pretty easy in that you kind of told them what your filing status was and how many exemptions you were going to claim, and they had a chart that they went to, the IRS, and that's what they based your withholding on. But you don't get, first of all, under the new tax law, you don't get a deduction for exemptions anymore. Mm-hmm. And so it sounds like this new W4 is going to be far more complicated. That's
interesting.
So does that spell out that there's even going to be a greater need for tax planning than there was in the future, so that we can kind of keep a tab on what is happening, so that we're not thrown this curveball at the end and find out, oh my goodness, I thought I was going to get this refund and now I don't? Or how do you see that panning out?
I agree with you. And here's the thing, for people that maybe have a CPA and we do your tax returns, it's a lot easier in some cases to try and plan ahead for this, because we're basing our projections on what happened in the current year. Obviously, nobody has a crystal ball, and certainly things can always change. And nobody plans on hitting the lottery, for example. But again, there's always been a need to try and plan ahead. I think maybe with all these new tax law changes and with the changes in withholding, maybe there's even a greater need for it before. Because nobody, forget the refund part of it. Nobody wants to get hit with a big tax bill at the end. It's not a fun thing, and so you definitely want to try and avoid that. So you want to have enough money paid in so that maybe you're breaking even, but you don't want to owe them a lot at the end, and really you really don't want to get a big refund either. So I agree with you. I mean, I think there's going to be certainly more planning now than before. I can tell you that.
Okay. So currently the W4, the new version of that form, is supposed to be released by the end of this year, so it's in time for the 2020 tax year. As you're looking at some of the application, though, that's on the personal side. If we switch over to the business side for a second, the new section that applies to small business owners, the 199A section, I believe. Can you tell us a little bit about that and what you're seeing as actual returns are being filed?
Well, the general rule, we'll start with the general rule, is that people that are in business, instead of having to report 100% of their income, only have to report 80%. But there's a lot of nuances to that go beyond the general rule. And, for example, where you have clients that have different sources of income. So, for example, say you're a doctor and you have a medical practice. Well, the income from the practice will be one source, but maybe you have rental properties that maybe generate income or loss. That's another source, or you have other investments. And so, as a tax preparer, what we're doing is where in the past there really wasn't that much to do when it came to include kind of smushing all of your income together. We combine your income from various sources. It kind of pretty much got put into one big pool. That's how we figured out your tax liability. But under this 199A, could be a big difference in how much you pay based on how you treat different sources of income. So let me give you a great example of a return we worked on today, where they had, I don't even recall the type of business they were in, but they had income that qualified for this 20% deduction, okay? Mm-hmm. And then they had some losses from rental property, which flowed through their personal return. Well, what the tax software wants to do is basically use that rental loss to offset the other income which basically then reduces this 20%. And so what you have to do is you have to be astute enough to figure out, wait a second, this rental loss has nothing to do with anything. We don't want to consider that when we take this when we do this 20% calculation.
Mm-hmm.
And in this one case, it probably made, I'm thinking about a $2,000 or $3,000 difference in tax by kind of making that change. So basically what you have to do is you have to look at every single source of income separately and independently and determine, does that help us on this new code section, or does this hurt us? For example, on rental property, if it's positive income, you made money, maybe it'll help us. If it's a loss, we don't like it and we want to exclude it. So there's a lot of strategy going on here, even in this first year when it comes to this one code section. And I think as time goes on and the IRS has different rulings, I think we'll refine it even better. But certainly for this year, I think that's causing us to certainly have to take longer to do tax returns because, again, we don't want any of our clients to be paying one single dollar more than what they have to.
Absolutely.
And so, I'd say it's been a challenge, just one code section alone.
Yeah, so this is a challenge for you as a CPA working on these returns. For somebody, as we're listening to this podcast, you might think, this sounds like Greek to me. It's obviously
right.
Job security for your CPA, right? You want to get a CPA that will look at all the different options for you.
The more complex the law is, the more job security I have. That's correct. That is correct. But you know what? I think the fact that it's brand new, I think, makes it a little more challenging.
Sure.
By next year, I think we'll be better at this. The tax software will even be better at this. The IRS will probably have come out with some different rulings on some of these code sections. But it's brand new, and so you're right. My expectation is not that the clients have to figure this stuff out. That's why they're paying us.
So maybe you're listening
to realize it, but behind the scenes, there's a lot more effort required, certainly in doing business returns this year.
Sure.
So maybe you're listening to this podcast and you're saying, "Man, my return didn't turn out like I wanted it to this year." And we've had a few people contact us, and we just refer them over to Jack, and we would like Jack to share his information right now with you so that if you need better tax planning or you're not really pleased with what happened with this new tax law on your return, you can give Jack a call. Jack, you want to go share that information with everyone right now?
And as I've always said to you guys, any of your clients, we are more than willing to take a look at their tax returns for free. Whether it's before you file the return or even if you've already prepared the return and not filed it, we'll take a look at it before you file it. We don't charge anything. All you have to do pretty much is just give our office a call, and we can either arrange for a phone call between us or arrange for you to send your returns over. Our phone number is 702-255-2330. And it's Campbell, Jones, Cohen, CPA, and if you just ask for me, we'll make it happen. And I'll tell you what, even today, I mean, we just got a client in yesterday, a new client, and he showed us his last year's tax returns, and they were probably the worst returns I've ever seen. He had, this is bizarro. These were Canadian clients. And they decided that they would have a Canadian, well, they're called chartered accountants. They had their chartered accountants in Canada do a U.S. tax return. It was awful. That's all I can tell you.
Oh, no. So, again,
what can I say?
Yeah.
So yeah, I mean, if you're not sure or you just want, like, even just a confirmation back that your return looks okay, just send it over to us. We'll take a look at it for you.
Okay, wonderful. So again, that's Campbell, Jones, Cohen CPAs, and the phone number 702-255-2330. Ask for Jack and tell him the McPhees sent you.
And of course, our goal is always to help you keep more of the money you make, and that's where Jack and I see eye to eye across the board, is that you shouldn't be paying a dime more than you have to for taxes. Neither should you pay a dime more for your insurance needs than you have to. And it's just a great fit. And Jack, thank you so much for doing the service to all the people that we've sent to you.
Thank you. I appreciate the opportunity to talk to everybody out there. And again, if anybody has any questions, they could just call me, okay?
All right. One more thing, Jack, before we go. I remember a few weeks ago when we interviewed you about the new tax law changes, we were talking about high state in states with high income and property taxes, states like California, states like New York. Just real quick, we knew the tax bills are going to come in higher. How are you seeing that as actual returns are being filed? More of the same, or people going to be moving?
No, a lot of provisions in the new tax law reduced the tax rates. People who live in those high income tax states have not been very happy because they just lost huge deductions. I mean, we have California clients that probably they could easily pay six figures between state income taxes and property taxes, and the part of the new tax law that concerns those deductions, limited deduction to $10,000 a year. So someone who previously, or someone who's paying $100,000 a year to California, and in the past got a deduction for $100,000, now they only get a deduction for $10,000. So I would say, pretty much those people are unhappy taxpayers.
All right.
So, the only advice I have for them is the advice I give everybody: move. That's all I can tell you.
Well, sometimes it takes voting with your feet, but moving out of the state to hopefully get them to change their policies on that.
Right. And I think over the years, and again, not to pick on California, but it applies to New Jersey, New York, Illinois. I mean, not everybody can really realistically pick up and move.
Sure.
But I'd say over the years, I've seen a steady exodus of people, a steady exodus of companies moving from those states, because they want to do business in a place that's more tax friendly. Mm-hmm. And Nevada is not the only state that's tax friendly. We just have really nice weather, but there's other states that are tax friendly as well.
That's correct.
And even like when I work for the IRS and I manage the audits of Fortune 500 companies, there's a lot of strategy that goes into with these companies to determine where they should be located. And I'm not even just talking about their headquarters, but where they set up production and manufacturing plants. A lot of strategy that goes into this because they don't want to pay tax either. So,
all right. Well, thank you for taking time out of your busy day to join us on the show today, Jack. Again, the number for those of you who want to call and get your return reviewed is 702-255-2330.
And don't forget that this coming October, the 19th through, what is it, John?
26th.
19th through the 26th, we'll be selling out of Fort Lauderdale, Florida to the Eastern Caribbean, going to go to some exotic ports. We're going to be talking about wealth, how to keep more of your money. We're going to talk about health, how to keep your health. And we're going to talk about how to keep a positive mental attitude so that your life goes better than if you have a negative mental attitude.
So that's right. So contact our office for details on the cruise, 702-660-7000. You want to book your cabin in early May if you don't make the May 1st deadline, because cabins will start going away after that point. So be sure to get your cabin reserved while there's still time to do that. Again, the number is 702-660-7000.
Thanks again, Jack, for being with us, and we'll talk soon, all right?
Bye-bye.
We'll be back next week. You are listening to Wealth Talks, where we talk about solutions, money, and other things that create wealth in your life.